and the options volume, the synthetic liquidity that they're driving in the options market is also going to fail. On Bobby, they're very unlikely to fail any of the volume they're generating, right? Big differences in primary market liquidity on those two stocks. Did Bobby ever complete their share sell-off or no? Like their offering? Did they announce anything? Ugh. I know people were saying that like they think they're getting bought out because they stopped selling gift cards. I was just gonna buy Bobby. Don't you know this? No, it sounds like horseshit. RC sold Bobby. People need to trust the DD. You and the quads do, and learn to have patience. Friday last week was the last half. The last half was explosive to the upside. I mean, we can see that again today, depending on what the market does here. I mean, if this is the drawdown, right, after Friday's run, it's very unimpressive, right? I mean, spot's still back here, which means exposure is persistent, right? Same for SPX. Don't forget, if we start moving up on that, there's a massive hedge on SPX pushing against downside price action right now. The quants are shills. That's correct. RC had to sell Bobby, otherwise how would he buy it? I know I've been here a while, but I guess I keep stepping out and missing the general bring it back to spot conversation. Can you explain that as brief as you would like? It's desirable for the market maker to return the price to the price that options were sold at. So if they sold options here, and those options went way up, right? It's very desirable to bring the price back to that level before buying them back. If they're unable to do that, then they're left with exposure, right? Because they take a lot of risk in the hedging. So, you know, if we move from like 20 to 25 and there's a strike at every dollar, right? And they're only able to bring it back to like 23, then, you know, they've still got 20s, 21s, and 22s in the money. I just want Upstart to announce the buyback is done. You're not alone. So, yeah. So, a lot of times you'll see, especially on options markets where, you know, the underlying stock is extremely influenced by the options market, like GME, you'll see the market maker over a T+2 period attempt to bring the price back into the range where they no longer have to hedge. If they're successful at it, then, you know, it's very good for the market maker. If they're not successful at it, you know, then they have to cover their hedge on T+2.